Very nice to have Uber CFO Nelson Chai join us back on set. Of course, you and I had a brief interchange prior to the beginning of trading. Nelson, you're one of the key architects, certainly, of shepherding this company to the public markets. Are you disappointed in the outset here with how you're trading?
No, not at all. You know, David, I said earlier that we really are building a company, right? And so building a generational company will take time. It was important for us that during the roadshow that we got conviction from some of the long-term shareholders, which we believe we have. This is really just a point in time. And we have a lot of execution ahead of us. I think there was consensus on the road about where people think Uber is going to end up over time. I think there's some people on the road that knew there was going to be some noise getting there. And I think that's just reflected in it. It's really on the management team to get back to work now. And we believe in terms of the platform, we can grow our business at scale, unprecedented scale. If you think about how big we've grown over the past few years, from 20 to 35 to 50 billion in gross bookings. In our first quarter, again, we were growing mid-30% above that. And so, we're confident in terms of the road ahead. There's a lot of execution, though, so don't get me wrong. And most important thing for us was to get out, right? So we raised a lot of capital. You did.
You raised a good deal of capital, but you're not getting out exactly in the most successful terms. I mean, do you think that this in any way sets a tone? There are a few examples I can think of, Nelson, of which a high-profile company like this is priced below, or begun trading below syndicate bids.
Well, so this was a little bit of a rough week in the markets. You guys would be no better than me. I think that was down about 300 today. There's a lot of discussion about tariffs, and so if you look at most of the broader markets, I think this was a tough day. And as you know, that matters on sentiment. There have been some IPOs that have not traded as well as you would have liked over time.
Did you think at all about perhaps not postponing, given the volatility this week? To your point, this is the worst week we've seen in the markets all year.
David, I don't think that we're smart enough to try to judge the market, right? So we've worked very hard. We prepared. We were going to move forward. We never viewed today as the day. We weren't optimizing to have the best opening price or the opening day. We're really looking to how the stock continues to trade over time, and that's what we're building for. As you know, it's not my first rodeo. I was fortunate enough to be the person working with John who took the New York Stock Exchange public back in the day. And so we know how this works. And Dara, as you know, is a seasoned veteran as well. And so for us, it was really about moving forward, raising primary capital for the company, and then just getting back to work. We have a lot ahead of us.
Employees perhaps differently than you would have otherwise. I mean, every CFO and CEO who I talk to around an IPO is conscious of how the stock price and the fluctuations of it can weigh on an employee's mindset. You've got a challenge here just because of the way this opened. Despite the fact that you're experiencing this, a lot of your employees are investors and they are not. What do you tell them?
So not surprisingly, when we talk to employees, there's a lot of interest, right, in terms of the Uber IPO and the stock. I think Dara and I have been very consistent in terms of the messaging, which is don't look at the stock price. Don't look at it every day. Do your job. The markets will take care of themselves, right? And so that's really what our focus had been. And so it wouldn't have mattered how we opened. It's not going to matter how it closes today, right? The story is going to be written over time. The company has had an incredible path, as you know. As you know, at Uber, nothing's easy, right? And certainly one of the things that attracted me to the opportunity was the challenge. And I thought I can come in and help. Hopefully I will over time. But the employees really should just focus on executing against the plan. And really that's what the focus should be. And it wouldn't have mattered how the stock opened today or how it's going to trade today. We've been pretty consistent in terms of the message that we've been telling the employees.
One of the questions that's swirling around out there right now for investors is, with Uber now public, with your rival, at least here in North America, Lyft now public, what does this mean in terms of price wars?
Well, so again, we think Lyft was, they made statements which made a lot of sense to us, right? And so on their earnings call, they talked about not competing on incentive, but competing on brand. And so that would be great. And so I think, as you know, we have 69% category position in the U.S. today based on bookings. We're very comfortable operating there. We know that we have a scale advantage. We think that it would be great if we could continue to move forward, and we just competed on service. We're happy to do that.
You also have a history in the insurance business. In terms of rising insurance costs, how are you getting your arms around that? And what does that mean looking out years into the future when you start getting autonomous driving?
So we think we have by far the best insurance team. So Gus Feldner, who runs our team, He's got a very big brain. And what I would tell you is when you're building up an insurance book, the most important thing is building up your actuary book. And so early on, we had the great partnership with James River, who was our insurance partner. Our actuary book is built up to the point now where we have a lot of the national insurance companies coming out and trying to bid the business, and so that helps. We've done a really good job in terms of having data. The company focus on safety and technology, and so there is a big push in terms of reducing incidences. The best way to deal with insurance is to do so. When we do have an incident, our incidence response times have improved greatly, and so you're going to see that also have an impact as well. The one offset to that is as we do more vehicle solutions. So we have partnerships with companies like Get Around and Fair, which are SoftBank-funded companies, where they lease our drivers' cars. You will see a little bit more incidences growing side. Important to note for investors that the insurance really impacts our U.S. rideshare business. As the business continues to grow outside the U.S., as Uber Eats and some of the other platforms grow, it'll just be a smaller part of our P&L.
Nelson, you got some drivers upset about the rate of their pay. And when I look, though, at your S1, $837 million you paid out in excess driver incentives in 2018 to actually give them more money than the fare alone would have. How does pay for drivers end up getting higher?
So we think when you run, so in the U.S., when you run the business that has a 69% category position, we think we have more utilization than others in our system. So hopefully they will be busier. So in New York City, for example, as you know, where there are these congestion pricing and these in place, we think that our drivers, and the minimums as well, which, by the way, we were supportive of, we think our drivers will continue to fare well because the utilization will be high.
Finally, Dara has been, and you have all been pretty communicative in recent months, and today, obviously. How would you characterize the relationship you're going to have with the street in terms of media presence, and how should our viewers get used to seeing you?
Well, hopefully they'll get used to seeing Dara a lot during the media, which would be great for me. I will probably be the person, I've tended in my career to more, somebody has to stay back and get stuff done, and that's what I've tended to do. And you know, the way it works with Dara and it worked with John Thane beforehand was, you know, they'll focus on what they want to get done, and I'll do what they don't.
Well, you know, one of your focuses, of course, is about capital raising. You did that today.
We did.
I would assume there are no plans, therefore, to do that into the future. At this point, given another $8 billion has come in?
Well, so as fun as it is to go do a road show and go spend 10 days doing 8 meetings a day, hearing yourself speak, you know, 8 sessions a day, no, there's no more plans to do primary capital as far as I could see. You may see us do a little bit of debt. We're going to optimize our capital structure. I have a great person coming in. Her name's Jennifer Jarrett, who's going to be focusing on that. And so you may see us do a little bit more debt as we continue to round out the capital structure over time.
And finally, as we move away from day one into the future, one of the keys, though, amongst the investor base that you were addressing, and that was somewhat surprising to Nelson, was the deceleration overall in your revenue growth rate. How should we be viewing the company in light of that in the days, weeks, months, and even years ahead as we follow Uber now that it is a public company?
Yeah, so what I'd really focus on is our gross bookings. And you should see a linear progression there. As I mentioned earlier, for a company of our scale to go from 20 to 35 to 50 billion, in the first quarter, we grew 34%, including the FX. If you take out the impact of foreign exchange, it would have been 41%. Year over year, and that's what I would focus on. You'll likely see choppiness in terms of our adjusted net revenue because lots of things are included in there. So I'd really focus on our gross bookings growth. We do believe that we have built a platform that can grow at scale for years to come.
Well, we appreciate you taking some time after the company's stock has opened for the first time. You think we'll end above 45 today, Nelson?
You guys are smarter than I am. You guys know the markets better. I'm not going there. So
all right.
thank you very much.
We appreciate it.